I'm here at the Denver Gold Forum with David Cole from EMX Royalty and Streaming. And let me tell you, I've known Dave and his team for a while now, and I'm a shareholder. Anyway, my name is Tom Calandra. Let me introduce Dave and let him tell the story about EMX and organic growth.
Tom, thank you very much. Appreciate that. Great to be introduced by you, Tom Calandra. And exciting times for EMX. Just announced a couple of large transactions. And because of that, I wanted to give you advance notice that this PowerPoint presentation I'm going to go through has some forward-looking statements with respect to large transactions that have not yet closed. So some of the slides I'm going to show you are pro forma, assuming that we do close. It's been an absolute pleasure to work with SSR Mining, who are selling us their royalty portfolio. We do expect that to close without any hitches by the first week of October. And some of the slides will be pro forma, assuming that that is in fact the case, and some won't be, as per advice from our lawyer team. So I'll point that out as we go, and I just want to make sure everybody understood that as we move forward. And we do have a unique business model in the royalty space. The bulk of our royalties, as Tom pointed out, have been grown organically. And the way we do that is through execution of the prospect generation business model focused on the royalty component of the deal, which we call royalty generation. And it's a fantastic model. It's the most astute allocation of capital that we do within the company. And we've been doing it successfully for 18 years. We're on track to sell 25 projects this year, on average of 20 projects a year over the last 4 years. We acquire large tracts of prospective mineral rights, add value by building and illustrating geologic models and selling those on to an industry hungry for discovery opportunities in exchange for cash, shares, work commitments, annual payments, stage gate payments, and always a royalty on the back end. So it works out nicely. We oftentimes get paid to build a royalty portfolio as opposed to paying dearly to acquire royalties. But one of the best aspects of the generative model is that we have people in the field, in the mining camps around the world, and we have a global presence that are continually identifying opportunities for royalties to be purchased and strategic investments which feed the other parts of our business. So the second prong of our business is buying royalties, and we find that the sweet spot, in our opinion, is the integration of growing royalties organically and buying royalties, and the two transactions that we've just announced are excellent recent examples of that will catapult our near-term cash flow and really help add beef at the upper end of our pyramid. Our strategic investing throughout the history of the company is another aspect that makes us unique. We've had a plus 40% internal rate of return on invested capital after tax through our strategic investments, and it's thanks to some big strategic investment gains that have enabled us to have a strong treasury as we have advanced this business over 18 years at minimal dilution and minimal raising of money as compared to the 4 million acres of mineral rights that we have in place. And I can see that this PowerPoint presentation, okay, all right, it was slightly different than the one that I thought we had in here, but that's quite all right. This is our global map. This is pro forma. This is including the assets from the SSR transaction. And very importantly, the Leeville mine on the Carlin Trend has been producing nicely. It declined in payment for about 5 years, although the exploration results within the footprint were robust. And over the last month, we've seen that start, the last few months, we've actually seen that start to really ramp up. We're very excited as they're now mining at the Carlin East Zone and the Four Corner Zones, both of which are fully on royalty footprint ground. And we're happy to be expanding our portfolio in Central and Eastern Canada. We have access to and fingers on, including our royalty positions, over 13,000 mining claims in the Western United States, growing portfolio in Chile and Argentina. We're the largest single mineral rights holder in all of Fennoscandia. And that has come from executing the generative model. Some key assets here in Eastern Europe at the Timok mine, where we have the royalty on the Timok project. That's a key long-term asset within the portfolio, and it speaks volumes to the execution of the model. And then very importantly, our largest cash flower in 2022 will be the Gediktepe oxide zone, which is a 10% NSR, and the sulfide zone's a 2% NSR. We're very happy to have Lydia advancing that. That mine will be commissioned on October 26th. So this is immediate cash flow. Also immediate cash flow is a recently closed Caserones mine, or as Scott Close, our Director of Investor Relations, likes to say, cash-arones. So got a couple of smiles here in the audience over that one. Tom probably likes that one. And we just announced today, in fact, that our first payment for Caserones came in at $974,000 USD after tax. And that's great because even though the deal just closed last week, the effective date was April 1st. So we've just gotten our first payment. And so we're very, very pleased that that's going to be a very long-lived asset. So strong geographic diversification, obviously, across the globe. We've been increasing our presence in Canada, the United States, and in Fennoscandia. Dominantly gold focused, but we are delighted to have base metal and battery metal exposure. We believe that all the metals are just a great place to be, and we're happy to have that diversification. We're not shy about that at all. We have been increasing our battery metal exposure and increasing our copper exposure. A lot of the future of the company is actually tied to some big copper deposits that we have royalties on. Part and parcel to our model, this sort of ratio has been about the same now for many years. About 60% of our portfolio are royalties, over 200 royalties within the portfolio. And about 37% are assets that we own 100% of that we're actively marketing to the industry. And if you follow our press releases, you see that our deal flow has been really good. It just continues to be good. There's strong demand for the discovery opportunities that we supply, and all of those create new royalties. This is definitely not the PowerPoint presentation that I gave to the boys in the back room a few hours ago, but that's all right. And we're happy to have many counterparties working on our properties, advancing them. And it's these folks that are expending their money. We get about $20 to $30 million a year, US, expended in drilling exploration dollars across our portfolio. And that's what really creates the discovery optionality. And that's one of the things that makes royalties such phenomenal financial instruments. And delighted to have these folks working on our properties. So this slide in particular is not pro forma. This is prior to the two transactions that we have just announced. So this will change substantially, but I still wanted to show it to make sure we're communicating properly. SSR will come in as a 12% shareholder, and we're delighted to have them as a shareholder. And that was a key component that facilitated the SSR royalty purchase. They were insistent to take equity in EMX, and they want to be along for the ride. They would also like to have a view to our Generative business, as they are always looking for discovery opportunities. That will add approximately 12 million shares to our issued outstanding and fully diluted. And so you can do the math there yourselves. And then here we're showing working capital and non-selected current assets, which would be our long and short-term investments, of approximately 74 million Canadian. That will change demonstrably as we have paid $33 million US, or we will pay $33 million US to SSR and $34 million US for the closing of the Caserones deal. That was funded in large part by a debt facility from Sprott Lending Group, which we greatly appreciate and have been long-term capital partners and supporters of EMX Royalty Corporation. So the 0.418% effective NSR on Caserones is a fantastic asset for us to have. We love copper. We're bullish long-term copper. This mine has continued increased production over the course of the last several years with a dip for COVID in 2020. But now we're back up, increasing again as per the quarterly payment that we received and announced today. Low stripping ratio, officially a 17-year mine life. We believe the exploration potential here is excellent. It would not surprise me if this paid for 30 years in the future. It's akin to having a 30-year bond payable in copper. And we're delighted to have that exposure and long-term, long-lived asset. Here's the production profile for Caserones as it was built and increased, showing the dip in 2020, with the last quarter having a nice uptick. And we're still about 25% short of nameplate capacity, so we do see production increases likely within the next few years, adding further to the income. 18 royalties that we're buying from SSR. Most importantly, the Gediktepe oxide, 10% NSR. That's not a typo. That is a 10% NSR on the oxide zone, which is gold and silver enriched. And unlike many portfolios of royalties that are sold that are back-weighted with respect to anticipated cash flow, this one is front-weighted because of the 10% royalty on that oxide zone. As I said, that's commissioned October 26th, so we're just days away from this thing being in production. Very, very pleased. So we'll see robust cash flow coming out of this right away. The sulfide circuit, where we have a 2% NSR in perpetuity on the project, will be run in parallel to the oxide circuit and will enhance our cash flow from that asset. I'm expecting this portfolio to come close to paying for itself within 4 to 5 years. And that's fantastic. And we've heard people talk about how robust valuations that royalties trade at. We're delighted to have purchased this one at the valuation that we got it, particularly having it front-end loaded with respect to the substantial cash flow coming from it. There's also $18 million worth of deferred payments that we are now in the shoes of SSR for that are coming our way as well. And very pleased to have the Diablios project in Argentina on the list there, and the Yeni Pazar net profits interest royalty, which needs to be fully de-risked before we pay for it. And the details of how that payment works is in the last press release associated with this asset. As I mentioned, Leeville's been doing really well the last few months. We saw the royalty revenue decline here slowly over the course of 5 or 6 years, and now it's starting to rebound. We knew it had to happen because the exploration results that were being announced by Newmont and now Barrick, who are the lead operator of the joint venture with Newmont on this mine, the exploration results have been fabulous, so we knew it was only a matter of time before we started to see the royalty checks start to climb, and last month was $194. We are happy to receive a check from this operation monthly. We expect those to continue for many years into the future. So you've heard me talk about the synergies of the organic growth and how that can feed acquisitions. This is a fantastic example here at Kaukoa, the LK project in Finland. This is a polymetallic palladium dominant deposit that is growing in leaps and bounds. It's become a multi-million ounce palladium equivalent endowment, and we're very, very pleased to have this. We were able to uncover this royalty and find out it was for sale by a prospector in Finland because we were in Finland doing generative work. Had we not been doing that generative work and executing our generative model, we would not have been able to turn this stone over and buy this royalty for 250,000 Canadian dollars. Quite pleased to have that. It's worth many, many multiples of what we paid for it, obviously. So Balya is an important asset. It's also an organically grown asset that is now coming into full-scale commercial production. This is a great example of the execution of the model. I actually bought this exploration license from the Turkish government for $17,000. Turned around, sold it to a capable Turkish partner for $100,000 and a 4% royalty. It's now going into full-scale commercial production. This will become a multi-million-dollar per annum royalty starting in 2022. They're currently advancing a shaft as well as a decline, and there's a 5,000 ton per day mill that is on the property. So we're very, very pleased about that, and a phenomenal example of what I've spoken to with respect to the model. Another good example is Cukaru, and this is one of the company-making assets within the portfolio. This is coming into production right now. We're expecting the ceremony to be next month. And they're advancing twin declines as well as twin shafts into the upper high-grade zone. There is a bankable feasibility study that was published by Nevsun before it was sold to Xinjiang. And in that bankable feasibility study, you can see what our anticipated royalty revenues would be. This will become a multi-million-dollar per annum payer to us in the upper high-grade zone. And when it gets into the lower zone, the significance of the royalty will expand dramatically, as the lower zone is 1.8 billion tons at close to 1% copper equivalent. So if you do the math on that, it's a substantial number. So our royalty generation is our hedgehog. We love that business. It feeds other aspects of our business, and it works like a Swiss watch. I believe that we sell as many projects as the rest of the project generators in the business combined. and we have an 18-year track record of having executed that business model. I get a lot of questions from generalists that are perplexed as to how we're able to continue to do that. And I often say, well, watch for the next press release, because we're going to keep doing it. And our strategic investing quietly works in the background. We have a couple ongoing now that I can't talk about. And it's done really well for us in our history, and really cashed us up a couple of times. And it was really the deploying of the fruits that came from one of our last liquidated strategic investments that has enabled us to buy this portfolio from SSR and catapult our cash flow and grow the company, which speaks to the royalty acquisition side of the business, which I'm very pleased with the last two transactions, and shows that we can buy meaty royalties even in the tough competitive space that we are in today in the royalty sector. And all this is combining together to be substantially more cash flow in 22, and I believe will be a step change with respect to the type of investor that wants to be involved in EMX, and ultimately significantly reduce our cost of capital moving forward. Thanks very much. Always our pleasure to be here at Denver Gold. Great to see folks out and great to meet in person again. Happy to field any questions. I'm guessing Tom would have a question.
I always have a question. Dave,
sure.
And it is EMX Royalty, Inc. The generative model, two-part question.
Yes, sir.
Does inflation pose any risk to that, as in the inflation that seems to be going on right now in, I don't know, reagents, metals, probably salaries like they were in 2010 to 2012, 2014?
Well, I'm of the opinion that inflation is one of the areas of optionality that royalty holders benefit from. Now, of course, that means that we have to pay people more, and it means that we have more expenses, but it means commodity prices are going to move. And we're exposed to commodity prices. We're all long commodities. And I think that those two weighed against each other. It's a positive for us.
Dave, are there any jurisdictions, continents that you decline to go into?
I get asked that question often, Tom. And you know, we have a global presence. We've worked in many, many different countries. I believe we have assets in 12 or 13 different countries. And all of those typically have been driven not by a desire to go to Haiti. We've worked in Haiti for a while, as one example, or a desire to go to Sweden. It was based upon acquiring the right economic geologic talent that we were able to leverage into a portfolio, which we were then able to leverage into selling and building royalties. And so it was a people-first approach, not a desire to go to Fennoscandia because we love the geology of Fennoscandia. Always keep that in mind with respect to looking at the portfolio. I can go back and tell you which geologist it was that got us into different regions of the world. And I will say that we did very well in Haiti. You know, we sold that to Newmont Mining Corporation for $4 million cash in the barrelhead and kept a 0.5% royalty. And they are now managers of that asset. So that did work out well for us, but it was one of the farther reaching adventures that we've had. We have certainly tried to beef up our top tier venue presence in Fennoscandia, Western United States, Eastern Canada in more recent years. We have no presence currently in Africa because we've not ever acquired the right team to get us into Africa. But the general answer to your question, Tom, is it's a people-first approach.
Are we going to see any questions from we do have a minute left from the audience. I would like to ask one more question. You know, the array of commodities that, I mean, I've seen you do battery metals, copper, of course, many, many other things. And I've been to a couple of the projects as well. Doesn't that create upward, higher costs than, let's say, a pure gold company for your technical team?
So many of these commodities and metals occur in similar geological terrains. So there's actually synergies. It's interesting, the financially important 4% royalty we have on the lead zinc silver deposit at Balya, we were actually in that district looking for the copper gold porphyry. And whilst we were there, we recognized, oh, there's a big carbonate replacement deposit here, and we should take advantage of that. And so that being opportunistic and keeping our eyes open and understanding the geology and being open to all metals has been synergistic, I would argue.
Okay, well, I see we're out of time. I want to thank Dave Cole and a couple of members of his team here in Colorado Springs. Thank you, David.
Thanks to Denver Gold.